Hello, everyone, and thank you all for joining us during the Lytham Partners Fall 2022 Investor Conference. My name is Adam Lowensteiner, Vice President of Lytham Partners. Before we begin, for those not familiar, Lytham Partners is one of the country's leading investor relations firms with more than 2 decades of corporate access experience. We have built one of the industry's most diverse and effective platforms for connecting small cap companies with high quality and focused institutional investors while creating a framework of best practices in all aspects of investor relations. Today's discussion is hopefully yet another example where we could bring value to multiple constituents. Our next presentation comes from LiveWorld, ticker symbol of LVWD, that is Lima Victor Whiskey Delta on the OTC Pinks. Presenting from the company today is its founder, chairman, and CEO, Peter Friedman, and its CFO, David Houston. Today, I've asked Peter and David to briefly run through the slide presentation, and then we'll engage in a fireside chat-like Q&A session. We will dive into the discussion in a moment, but one final item. I want to remind everyone that LiveWorld is available for one-on-one meetings later this week. If you have not already signed up, please send me an email at lowensteiner@lythampartners.com or visit www.lythampartners.com/virtual and click the one-on-one meeting request button. With that said, let me now turn the presentation over to Mr. Peter Friedman, founder, chairman, and CEO of LiveWorld. Peter, please proceed.
Thank you, Adam. And hello, everybody. Welcome to our Fall 2022 Investor Presentation. First is our Safe Harbor Statement. I know you're all familiar with those. As Adam said, I'm Peter Friedman. I am the founder, chairman, and CEO of LiveWorld, and joining us as well as David Houston, our Chief Financial Officer. First, I'd like to talk about what our business is at an overview level. LiveWorld is a digital agency specializing in social media and technology solutions. When we deploy these, we're focusing on the emotional connections that build a relationship between a brand and its customers, and we do this to help them meet specific business objectives in marketing, customer service, and our primary sector, healthcare, actual healthcare outcomes. I think the most important reflection of our value, long-term and day-to-day short-term, is the longevity of our client relationships. We've been with American Express for over 14 years, over 10 years with each of Pfizer and Zoetis, 6 or 7 years with each of Bristol Myers, FedEx, and AbbVie. Today, we work with about 70 brands spread across about 20 clients.
Let's talk a little bit about the business model. Our business model is very much focused on value. We create enough value for our client that they're willing to pay us more than it costs us to actually do the work. I know that seems very obvious and basic for a business model, but if you look across the digital social landscape, there aren't too many companies that say that they're doing this. For us, it starts with high gross margins, consistent with the value solutions we provide. Also scale, particularly in our moderation services and our software. Our revenues are mostly consist of annuity streams, annual repeating moderation contracts, and SaaS software licensing. Even our digital agency strategy and creative work is mostly ongoing retainer work that repeats year to year, not just one-off projects. The agency work creates a strategic relationship with our clients, and this pulls along the higher gross margin and more annuity-like moderation and software revenues. Next. Over the last several years, we've decided to focus on a vertical market, specifically healthcare. This combined with our unique solution set has propelled our growth, and our healthcare now represents 88% of our total revenues. Currently, we work with the top pharmaceutical companies and a major pharmacy chain. We're now extending these strengths to another segment, hospitals. Here we're working with Mount Sinai Medical Systems and Mass General, 2 of the largest and most innovative hospitals in the world. We believe the additional work from our current clients and adding new clients in pharma and hospitals can support our growth for the years to come. I'll say that again. We believe that additional work from our current clients and adding new clients in pharma and hospitals can support our growth for years to come. Then we see opportunities in additional healthcare segments such as payers, and finally taking our model to another vertical segment, such as financial services.
Our growth over the last several years has really been driven by our vertical focus on healthcare and also expanding to be a full-service digital agency. This gets us new clients, but it also leverages the existing client relationships so we can expand our revenue with them.
Let's give you some quick financial overview of the company. We're currently compliant with SEC 15(2)(c)(11), so we're freely tradable. Our top line revenue went from 7.4 million to 8.6 million from 2019 to 2020, or 16% growth. We were then able to grow at 18% to 10.1 million last year. In 2019, we had a net loss of $449,000, and we were able to turn that into a profit of $366,000 in 2020. In 2021, our net income was approximately $796,000, more than doubling our profits. Our cash has grown from $730,000 at the end of 2019 to almost 3.6 million at the end of 2021. We've done this using no debt, and we're cash flow positive from our operations.
Now I'd like to give you a little more view of the depth and breadth of our entire executive team. It's not just David and me. Our team includes about 40 people in corporate. These are strategists, creatives, data analysts, client and program managers, software developers, sales marketing. Most of these team members have been with us for 5 to 10 years, some as much as 15 to 26 years. It's a very, very experienced crew. Plus, we have well over 100 moderation agents, almost all employees, almost all located in the US. These are a flex workforce whose hours can go up and down as our moderation volume goes up and down on different projects. And most of these agents have been with us for 5 to 15 years. We're also very proud that at every level of the company, we pursue and we achieve diversity. That's not only the right thing to do, but it enables us to bring our clients a richer set of lived experiences with which to meet their business challenges. Next, we like to go into these solutions. Whether it's healthcare or really any market segment today, people are searching for connections. This is just basic human nature. We help brands make those connections with and among their customers. With a combination of our services and technology, we make those connections which spark conversations. Conversations are the basis for relationships. Relationships build emotions, and that's how you drive behavior change. And if you want to meet business objectives, whether it's increase in sales or education or insight, you've got to change behavior. And that's what we do for our clients. There are 3 models to our model, or 3 elements to our model, which can stand alone, or they combine together for even more value. These are creative, moderation, and technology. That we provide all of these is very unique. When you then add in our depth and experience in healthcare, it's even more unique. Let's go through each of them. First is creative. This takes the form of digital marketing campaigns, what a digital agency does, that are the inspirational call to action for an audience, and it also sets the context for the rest of what we do, moderation technology. Creative and the associated strategy work bring us to the heart of the client's business objectives and strategy. That's how we build a deeper relationship with them and frame the relationship for the other solutions, starting with moderation. In moderation, our live agents, there's 140 agents, supported by our technology platform, protect the brands on social media, reviewing and removing or escalating or solving problems with problem user content. You all heard about that. Then our agents will engage the users, thus activating a human touch and feel. So the creative that I already talked about is the foundation of the brand campaign. Then moderation extends it, actually sparking a conversation and building the relationship, stimulating and guiding users to create content themselves. And from this, we also get all kinds of insight and ideas that then inform the creative and strategy team. Last is, before I get to that, another part of moderation, which is a must-have for pharma companies that they can't operate in social media without, is managing adverse events. That's because they live in a regulatory environment where the Food and Drug Administration requires that all adverse events they come across are tracked and reported. So what's an adverse event? Well, an adverse event is when someone has a problem with a drug or talks about it in a way that's off-label or counter to the instructions on how it should be used. Any comment like that on a pharma company's Facebook page or in response to a Twitter comment or on Instagram or on LinkedIn has to be marked as such, tracked, and then escalated through the company to the Food and Drug Administration, in some cases within 24 hours. If a pharma company doesn't get that right, and they get a letter or a call from the Food and Drug Administration, they are at risk of quickly that leading literally to the shutdown of a multi-billion-dollar business. This is a must-have, one that we are a leader in and known for. In addition to that, our integrated technology enriches these connections. It enables the creative to be more interactive and a richer customer experience, and it scales the experience, particularly the moderation. We also use the technology to collect and analyze data to further inform our creative and our moderation. Of course, each of these solutions is a lot more than I'm talking about right here. The creative has research and analytics, the creative concepting, process consulting, campaign planning, the actual design and production and deployment of a campaign. Moderation starts with listening of the social web and content review on their pages. This adverse events must-have I just talked about, responding, engaging, customer service, social media crisis management. We even build whole online communities to build relationships and drive business objectives, such as the one we've just done this past year for Mount Sinai Medical Systems, which is called Navigating Dementia. The technology includes our platform for moderation and conversational management, as well as bots and apps we use in the campaign and a whole bunch of other digital work. Each element of the model stands alone, but directly interacts and affects, enhances, and pulls along the other. Let's start with creative here. Creative, basically, we create disruptive ideas that enable our clients to be differentiated in their noisy markets. The creative also attracts us new business. It makes us stand out, helps us win awards. That's how the agency business works. It also sets the frame for the other pieces of the business, starting with moderation. Moderation is an annuity stream based on our flex workforce. It's a regulatory for a must-have, and as I said, it sparks the conversations and builds the relationships. Technology is a SaaS annuity revenue stream that scales the rest of the business and makes it richer, and it also gives us cost advantages. We're able to do all these things for less cost, which enables us to charge the clients less and make more of a profit. So the client's economics are better and our economics are better. All for integrated value. For over 25 years now, we've been providing these pieces, this value, and building emotional connections for top brands in the world. Everyone from the community part of the award-winning Dove campaign for Real Beauty, to the work we do for American Express today, to our work today for top brands in pharma and hospital markets. AbbVie, Rite Aid, Nutricia, Mount Sinai Medical, and more. And as you look across these, you will see any of our components, creative, moderation, or technology, or all of them working together for these various brands. Next, I'd like to talk about how the revenue grows. The revenue grows in stages. It generally starts with a smaller project, a sell-in, be that a creative project, a small moderation offering, a tech license, or a tech project. And sometimes we actually start out as the new agency for digital and social. This first revenue can be anywhere from $25,000 to a few $100,000 for that year. But whatever we sell in, we then proceed to drag along or upsell to the other parts of the solution. So if we win a deal to be the creative digital agency, then we right away start talking about all the moderation they need. We build campaigns that bring in the technology. And we do that partly because these other things like the moderation will differentiate us to first win the business, but then it expands it. At that point, the project can grow by another 80 to a few $100,000 in addition to the base. After that, we're doing good work, it expands. A client starts with a Facebook page and a Twitter page, then adds Instagram and LinkedIn and TikTok, or they have other campaigns they want us to do, or they have international groups that need us to do social media and management and moderation for them in France and the UK and Japan, things like that. Those can grow a program to a total of $250,000 to well over $1 million a year. And then with all these very big clients we have, it's not just the people we started with, but all kinds of other brands and divisions and corporate. And then we'll go about and sell them because we have an MSA, we've got good references. And that can add $150,000 to $1 million per brand, bringing a single corporate client across multiple brands to $600,000 to millions of dollars per year per client. Now we'll talk about the market opportunity.
So when we look at the US healthcare marketing spend, it's actually rather impressive. In 2019, the marketing spend across the healthcare sector was approximately $30 billion. In that year, pharmaceutical sector made up approximately $13.2 billion, and the marketing spend from hospitals was approximately $14 billion, while the remainder was mostly in devices.
Healthcare, as David said, is a huge market opportunity. In my 36 years of social and digital experience, I've seen healthcare consistently be one of the largest social media usage patterns, and for very particular reasons. There is a unique affinity between healthcare and social media, in part because people, whether they're patients or family, support caregiver members or doctors, want to know what other people like them with that condition are experiencing. And you don't know where they are. They could be on the other side of the country or next door. You wouldn't know. Social media drops that barrier and connects people. It's also because it's a lot of complex, ever-changing information. And human beings like to filter that kind of thing through other human beings. Social media grew dramatically during the pandemic, particularly in healthcare. Average use of social media overall, just overall, by adults jumped 5%. Conversations around COVID went up by 1,000% among physicians and by 2,500% among patients. And for physicians, it's not just COVID. Over 80% of physicians currently use social media for professional purposes, not just personal, they're using it for professional. But the pharma companies aren't marketing at that level to physicians through social media. That's a gap they have to catch up to, and we help fill that gap. And we're doing pretty good. We've got a pretty strong position in social media and healthcare today. We currently manage over 300 healthcare social media properties, and we deliver over 90,000 hours per year of healthcare moderation and engagement for all these big brands. Now we're going to go on and talk about our financials.
Sure. So looking at our healthcare related revenues, we've seen about 25% growth in each of the last 2 years. Importantly, the growth has come not only from new client acquisition, but growing our revenues from our existing client base. In fact, some of our client relationships go beyond 10 years, which is rather unusual for an agency and underscores the value that we provide to our clients. Next slide. Thanks. So before we go into the top line financials of the company, I would recommend everyone go to the LiveWorld IR page and download our reports. We go into more detail on our Qs and Ks. Now, regarding our annuity revenues, we see a slight growth from 2019 to 2020, and then we saw it grow again for 17% from 2020 to 2021. You'll notice that in 2021, it was 72% of our total revenues. When we see the top line revenue growth of the company, it grows approximately 16% and 18% over the last 2 fiscal years. We've seen growth in all of our solution areas: creative agency, moderation and engagement, and software. It turns out being at the intersection of digital, social, and healthcare is a strong position for us. As we grow, we'll look to expand further into healthcare and later into other vertical markets. Now, looking at the P&L overall, we can see that we've grown. We've been keeping our operating expenses in line. This resulted in improving our operating income from 5% to 8% in 2020 to 2021, respectively. We've had material improvement in our cash position from approximately $730,000 in 2019 to almost $3.6 million at the end of 2021. I currently expect to see our profits continue and to see our cash flows from operations be positive. Now, with regards to Q2, when we review these numbers, we saw a 9% growth in our revenue while maintaining our profits at roughly 7%. In 2022, we've made a conscious decision to increase our sales and marketing efforts in order to increase our revenues over the next few years. We expect to continue these efforts throughout 2022 and into 2023. Here's a look at our most recent balance sheet. Our cash is flat, while our AR grew from the end of 2021 to the end of June 2022. We have no debt, We have no long-term liabilities, just payables and accrued employee expenses. You will notice that in the first 6 months of 2022, we've increased our asset base by approximately $782,000. Again, for more information, I'd invite you to go to our website and download our more detailed reports. Let's talk a little bit about the shareholder base. You can see Peter is the largest shareholder, owning 21% of the company's outstanding common stock. We have a handful of other individuals who have large stakes in the company as well, including one of our board members, Mike Gold. Then there are two corporations, WPP and Starbucks, and they have 6% and 4% respectively. This group represents about 60% of the total shares outstanding, while the remaining 40% are distributed amongst a wide range of individuals. Now let's talk about the current valuation of the company. When you look at a similar services-based agency, a conservative valuation metric would be 2 to 3 times forward-looking revenues. Now, we're not providing that sort of guidance at this time, but if you look at our trailing revenues for 2021, you'll see a huge discrepancy in our valuation compared to similar companies. Recently, our stock price has been about 17 cents a share, with roughly 46 million shares outstanding. This would make a market cap of $7.7 million, which is less than 1 times revenue. When we use the metric of 3 times our $10 million trailing revenues, our value should be in the neighborhood of $30 million. This equates to a stock price of 66 cents a share, as compared to the current price of 17. We consider the 3 times revenue approach conservative, as it's a creative agency reference point and doesn't take into consideration the value of our high margin moderation annuity and our revenue streams that come from our SaaS software. Our goal is to bring the actual valuation into line by continuing to deliver unique value to our clients, growing our revenues, and now communicating our story to the investment market. Public markets. A few years ago, we made a conscious decision to focus on healthcare and expand to being a full-service digital agency. Before coming back to the investment community, we wanted to demonstrate the value of those decisions, that we can grow the revenue and be profitable. Now that we've done that, we're stepping up our investment communications. We're looking to engage with the investment community in 2022 and build this into a reintroduction in 2023. When the time's right, we'll look to move up the OTC and be a fully compliant SEC company. We will continue to grow our current market segments and look for new ones, and we will consider growth through acquisition. So let's go through a few of the investment highlights. We've got a strong client base, primarily Fortune 100 companies. We've got long-term client relationships, some as long as 14 years, others in the 7 to 10-year range. We've got a proven business model, providing key digital marketing services and technology. This goes back to our creative strategy and services, our moderation engagement, and our technology platform. Recent track record of growth has been very good as well. We've got last 9 quarters of improved revenue, profits, and cash from operations. As far as the growth opportunity is concerned, the healthcare market is huge and expanding, and we have the ability to upsell services and expand into other brands and large corporations. And primarily, our revenues are recurring revenues. As mentioned earlier, our annuity streams are approximately 72% of our current base of revenue. And finally, we've got a strong balance sheet, over $3 million in cash and 0 debt.
I'd like to thank you, everybody, for your time and attention. I hope you've learned more about LiveWorld, our business, our team, how we differentiate ourselves in the marketplace and grow revenue. And now I think it's time for some Q&A.
Thanks, Peter and David, for the overview. Let's expand a bit on a few topics. So LiveWorld has an amazing client roster. You mentioned several of those blue chip clients in your presentation. How was LiveWorld able to attract these companies as clients? How did LiveWorld find them, or did they find you?
Quite a bit of our new business actually comes from referrals from existing clients. Sometimes just being asked around, or somebody at one client leaves and goes to another one, and then they bring them with us. We also meet people at industry events or events that we put on. And finally, we do targeted content marketing and SEO through social and digital media.
Maybe discuss the evolution a little bit for the audience of digital marketing services and the industry. Where are we in the cycle, especially with the uptake in use in social media channels? How has that changed the way companies interact with consumers and the public?
Well, the most important thing to understand is if you look at the multi-thousand-year history of business, when that's written, it will say that most sales and marketing has been a function of conversations that build relationships. Think Roman and medieval markets, or in the 1800s, a general store, and there were chairs, people sitting around talking to each other. It's only after World War II and through the 90s that sales and marketing becomes mass marketing based and technology starts to function to isolate people. Then in the late 90s, or in the 90s, and certainly since the turn of the century, the internet and social media bring the world back to its natural marketing state, connections, conversations, and building relationships. And we've seen over the last couple of decades, bit by bit, trending upward, first digital and then social, online communities, America Online, Facebook, all these different things we've got going on. And that's just growing and growing as ways to go. Now, there is 60 years of inertia in the marketing and brand world, used to TV and putting things up and not talking or listening to anybody. And that pops back every so often, but it's going down. And we know this because even though there's so many thousands or tens of thousands of traditional marketers, there are 2 to 3 billion people on the side of social media. That's where the eyeballs are, that's where the minds are, that's where the hearts are. So more and more it's going that way, and brands have to start owning the customer experience. Now combine that with the transformation of healthcare, it may be slow, but it's huge. And again, brands and hospitals, everybody are gonna have to own the patient experience, own the physician experience. And the way to do that is through digital and even more so social media, and really engaging these people and help becoming not just a bunch of ads, but helping to architect the experience that they're having.
You mentioned in the presentation that American Express and John Hancock are clients. What types of services do you provide them? And is specialty finance another vertical that could be a growth opportunity for LiveWorld and any other industry verticals? And if so, why?
Well, we provide a mix of our services to these companies. Moderation, which is an annuity, is usually the largest part of the mix because of the nature of it. But we use our technology, and sometimes we're doing digital marketing for them. Our focus on healthcare has given us a lot of vertical market leverage, value add, and customer mindshare. We were able to grow that from $1 million a year to $9 million over the last, 7 years or something like that. And that was because of that vertical focus. We like it. And it's a really big market, like, a quarter of the economy. And we think healthcare segments can keep us pretty busy for a number of years. Today it's pharma, and we're beginning to add hospitals, but we see insurance payer and medical devices and clinical trials as all ripe for us when we're ready. It's a matter of focus. Noting over our 27-year history, we've had top brands, literally Fortune 50 brands, the biggest number one brands in the world in finance, like American Express, in travel, in retail, consumer packaged goods, entertainment, automotive, tech. We've been in all these segments with the top leaders in them. So we know how to do them, and we have specialties there as well. But we think the vertical market focus is a really good way to go. After we've done enough in healthcare, and even though it won't be done, it'll keep growing, at some point we'll move on to more vertical market segments. Most likely will be financial services, because this also has regulatory challenges like healthcare does, and they're really concerned about it. And we have a lot of experience with a number of different clients, and we have one of the top ones in the world with American Express as a reference right now.
We're running up against some time here, but maybe we could squeeze in a couple more questions. Investors are obviously, concerned about a possible recession. How does your business typically act during a slowdown, and what would you like to share with investors to soothe those concerns?
Of course, nobody can guarantee what's going to happen in a recession. Now, with that said, we've been able to show top-line revenue growth as well as profits during this period. And that's because people need healthcare even in a recession, maybe even more so. Secondarily, social media as a marketing channel is on the rise and continues to take market share away from more traditional channels such as TV and print, mostly because social is more effective and efficient in marketing to individuals. We found that if companies have their overall marketing budgets cut, more gets shifted into social media channels because it's more efficient, and that goes towards our revenues. We also manage our financials conservatively, which is a key reason we've survived over through multiple downturns over the last 20 years. We feel maintaining a healthy balance sheet is critical during this time period of uncertainty. And finally, our cost structure is flexible and enables us to cut back as needed.
How should investors think about how large your business can really grow, and how can you get there? Can the company get to 20 million in annual revenues?
The overall market for digital and social media marketing and customer service is very large, tens of billions of dollars. The healthcare market is huge. This means there's plenty of room for us to grow. As Peter had mentioned previously, we can go in and get a project with one particular sector. It might be creative. Then we can expand that into additional moderation services, which we can then expand into software licensing. We can also look at large companies and expand into different brands. So we may be brought in for brand A, but then be able to take on business from brand B. We've demonstrated that we've been able to scale the business, in particular, expanding our existing client base. Our challenge right now for us is that the market is noisy and it's hard to get new leads and to be heard. But as we grow and build a reputation, it should become easier and easier to add value and to grow that top line revenue to the $20 million that you mentioned.
Great. Before we conclude, anything else either of you would like to add before we conclude the discussion?
Just that we're a very value-focused company. First, creating compelling value for our customers. Not that many internet companies have proven they can be profitable. We're very proud that our clients value our work enough to pay us more than it costs us to deliver to them. Second, creating a valuable work experience and environment for our team so that we can attract, retain, and motivate the best kind of people and have people that really want to create value for our clients. And of course, as we build all that value, we're looking to build value for our shareholders as well. We hope you all see this model, like this model, and join us in pursuing it.
Peter and David, thank you very much for your time today. We greatly appreciate it. To anyone out there that has not already signed up for a one-on-one with LiveWorld, again, please send me an email at lowensteiner@lythampartners.com, or again, visit www.lythampartners.com/virtual and click the one-on-one meeting request button. We hope you all had an enjoyable conference. Thank you.